Let's take a look at the state of Kenya's insurance sector. Where are we at the moment, and are we moving in the right direction?
The insurance sector in Kenya is thriving. We've got 46 insurance companies. We've got about 150 insurance brokers. We've got about 3,000 insurance agents. We're looking at a revenue of 79 billion shillings in 2010, projected to be about 95 billion shillings for the year 2011. The most significant thing here is that the growth of revenue for the Kenya insurance sector has been at 16% compound average growth rate for the last 6 years. Whereas, of course, GDP has actually been probably about 3 to 4% average during that particular period. So clearly, the insurance sector is thriving and growing quite robustly, notwithstanding the competition.
Let's take a look at penetration levels. Kenya is still lagging behind. We are currently at 3%. What role is AKI and other insurance stakeholders playing to grow these numbers?
It is true. Insurance penetration is 1% of GDP for life insurance and 2% of GDP for general insurance, making a total of 3%. By benchmarking our performance against other countries in the world, we know that this can go to 3 or 4% for life insurance, which is about 4 times the growth of 4 times where we are right now. General insurance, it can certainly go to about 5% or 6%. So really, there is scope in line with these benchmarks for growing the industry way beyond what it is at the present time. Obviously, this is what has informed new entrants into the market, and it is what is informing innovation that is taking place in the market.
Some analysts have been quoted as saying the industry has too many players despite its relatively small size. Is there room for consolidation in the sector?
There's a very big opportunity. First of all, the level of competition between the competition means that products are being generated that align closer and closer with the needs of customers. It means that price is affordable for the insuring public. It means that there is investment in innovation by insurance companies seeking to outdo each other. It means that there is investment also in distribution channels. As we speak now, there are a few companies who are considering whether to merge with each other or not. There are some companies also who are looking for buyers, but I do not believe that this is going to be significant. Because if you consider that there are actually 46 companies, you consider that we've actually had entrants into the market within the last 2 years. Entrants who are doing business in a different way, different emphasis, different strategies. This is a very, very healthy trend. So consolidation or no consolidation, I believe the industry is going to continue to do well, and Kenyans are going to benefit from this.
Moving on, Mr. Wandera, what are the immediate challenges that the sector is grappling with today, and how are you negotiating them?
The first challenge that we've got, of course, is that the country is inadequately penetrated for insurance. And the question actually comes home to, do we have the right products? Do we have the right business models? Do we have the right distribution to provide cover to Kenyans? Because it is clear that Kenyans are suffering from not using the insurance mechanism. We read continuously about how people suffer as a result of fires, hospitalizations, deaths, and so on. How businesses, particularly small businesses, micro and small businesses, go under because of the interruption that comes in the income of that business when the key person in that business actually expires or is disabled or is hospitalized for that particular matter. Now, all of this need not be the case if insurance would actually have been in place.
Finally, Mr. Wandera, what is your outlook for the sector in 2012? Is it promising?
We have new governance structures which have been brought in by the Constitution. We have got a very resourceful private sector. We have got outlooks in terms of GDP growth in the range of 6% over the next 5 to 6 years. There is so much that is happening in the region, and we have seen governments focus on economic development. This is actually driving business. And this, of course, means that the markets that we are supplying as insurance companies are getting bigger and bigger. So we certainly believe that the industry is going to continue doing well.